I remember when I was 15, I lost 20% of my account investing in Royal Bank of Scotland. It was only about £100 and that was in 2002. I didn't touch another stock until 2018. This time I lost thousands, and combined with a personal tragedy, I made the decision to sell all of my investments. Come 2020, I began investing again and I was up tens of thousands in unrealised profits. I held on to my investments through 2021 and gave back so much in gains. That's it, I had had enough. I cashed out. I started thinking if it was all worth it in the end. My goal was, and still is, to be able to have the choice to retire in my 40s. However, I came to realise that getting wealthy through investments is a long game that requires lifelong patience and big money. And I thought, there has to be a quicker way. I had read stories of people making millions in just a few short years by trading stocks. This gave me motivation and I set my goal on becoming one of them. Before we even get to my trading journey, you have to understand why I stopped investing in stocks in the first place. So let's rewind back to the first quarter of 2018. This is when I really started getting serious about stocks. I didn't even know what day trading or swing trading was back then. All I knew is that I had some spare money lying around and I wanted to invest it in the stock market, specifically UK based stocks. But where to start? Of course, I turned to the internet and started reading and watching all sorts of investing news and advice on various financial sites and forums. I even started buying this popular weekly investment magazine called Investors Chronicle. Every day, I spent hours and hours listening to and reading the opinions of so-called investing experts. I read the Naked Trader books by Robbie Burns, and I even went as far as to read a book about accounting, which, by the way, I couldn't finish due to boredom. I had so much knowledge that I thought I had become the ultimate expert. And for a short while, I was. Most of the investments I had made during the first half of 2018 were profitable. Some of my investments included Dot Digital, GVC Holdings, Numis, ITV, and Keyword Studios. In my mind, I wasn't far from becoming the next Warren Buffett. My dream of mansions and first-class flights were being fast-tracked. But reality hit me, and it hit me hard. I didn't realise it at the time, but I bought these stocks near the lows of the brutal 2018 correction of the FTSE 100, which only lasted for around 3 months. The sharp recovery that followed was responsible for uplifting my entire portfolio. I wasn't a genius, I was just at the right place at the right time. The old saying of, "Don't confuse brains with a bull market," applied perfectly to this scenario. And since I had plans to hold on to these stocks for the long run, I had to watch each one of them decline one by one. Now remember, at this point, I was an investor, not a trader, so selling them never really crossed my mind until it was too late. None of my investments bounced back, and I ended up selling all of them by October 2018, partly because I was getting sick of seeing red in my portfolio, but mainly due to personal reasons. It wouldn't be until the middle of March 2020 when I began to invest again. I couldn't exactly pinpoint where I went wrong the first time. I thought I was just unlucky with the market downturn, but this time it would be different. This time I had even more knowledge, which I learned from notable investment books such as Peter Lynch's One Up on Wall Street and the Market Wizard series. My research and planning was better than ever, with a stronger sense of company financials and fundamentals. All of the details were meticulously saved in Excel spreadsheets. I also had some semblance of chart reading, and this time I was able to make some sense of the jagged lines of the chart. The highs, the lows, support and resistance, but nothing more than that. I didn't know about candlesticks, volume or stop losses. Like before, I managed to start buying stocks near the lows of another bear market, the brutal but short-lived COVID crash. The timing of my purchases were impressive, but in hindsight, this was probably mostly due to luck. Aviva, Dot Digital, Focusrite, IG Group, Ceres Power, these were just some of the stocks I purchased during the recovery phase of the COVID crash. And just like before, these were investments, not trades, so I was holding for the long run. Just how long was anyone's guess? Buy and hold was a superb strategy because what followed was one of the biggest and longest bull market runs ever. It lasted nearly 2 years thanks to the aggressive economic stimulus. Everything was hot. EV stocks, tech stocks, finance stocks, REITs, you name it. Everything I touched turned green. I had the magic touch. And in the end, I was able to sell most of my investments for a chunky profit, usually at completely random times when I felt I had made enough money. But for some of them, I reluctantly sold for a loss after they took a big dump. Ceres Power was particularly painful. This investment remains etched in my memory. I first bought it in May 2020 for £4.13 and topped up twice, once in June and in October of the same year. I was part of its crazy acceleration and had well over 200% gain on it. Unfortunately, elation and greed took over me. I really believed this hydro energy company would be the future, but in the stock market, nothing lasts forever. Ceres peaked in Feb 2021 at just under £16 and then began its decline. I held all the way through its bumpy journey down, holding on to the hope that it would come roaring back, and it looked like it would a few times. This drop also coincided with the decline of growth stocks during this period, but of course I had no idea at the time. My only saving grace was that I sold a third of my position in November 2020. However, my entire position was liquidated in March 2023 for an average price of £4.11. Unbelievable. I haven't done the math on it yet, but I'm pretty sure that at best it was break even. All in all, my account size increased by around 70% during this bull run, but honestly it should have been a lot more. I had seen some silly returns during this period made by traders who seemed less knowledgeable than myself. I had to find out why. How were these Wall Street bet minions making so much with such little knowledge and effort? I was clearly missing something. If I was going to become rich through stocks in a relatively short space of time, investing wasn't the way. To be honest, losing money wasn't the problem. It's the fact that the losses happen so slowly. Having money tied up for so long for little to no gains is an opportunity cost. I was fed up with it. I wanted to get in, take my piece of the pie and get out, then move on to the next pie. While it's true that you can just play it safe and dollar cost average into the S&P over 10, 20, 30 years, which is probably the typical investment advice recommended for the average person, but I personally don't want to wait until I'm in my 60s or 70s to be able to enjoy my money. Who knows what's going to happen from now until then? Anything can happen. All I know is that I've chosen this path of trading and I've stuck with it for the past 4 years. I went from consistently losing money to losing less to making back my losses, and now I'm finally profitable. My trading journey will be saved for another video, but for this one I just wanted to share my story of why I stopped investing in stocks. Now, I'm not saying it's a right or wrong thing to do, because everyone has their own different personalities and goals in life, and no matter how long it takes, when you eventually know yours, you'll be able to make clearer and more determined decisions. Share your thoughts on investing versus trading in the comment section below, and if you like this video, just give it a thumbs up and subscribe for more swing trading tips.